Hey everybody, thank you so much for joining this evening on Sunday before President's Day. We do not have any trading tomorrow, but we did want to get this in on Sunday so you have a day to kind of absorb what we talked about today and get ready for the week ahead. So in this particular webinar, we have our guest, AlwaysRed. His name is Zach, and he'll be going over a lot of different things this evening. So thank you, Zach, for joining tonight.
Thanks for having me. Just want to say thanks to TrendSpider, Dan, and Jake for setting this all up. I'm looking forward to sharing how I trade, and let's just go from there.
Beautiful. Well, as always, we're going to do a quick disclaimer, just so everyone knows that this presentation is really to focus on not only some of the features on TrendSpider, some of the things that make us unique, but Zach's trading style as well. Everyone's going to have their own trading style. Everyone's going to look at an indicator or set up differently. So this is simply just looking at the way he trades, how he does his technical analysis, and how he uses TrendSpider to really find an edge in the market. So before we hand it off to Zach, just quickly go over today's agenda. First, Zach will go over a presentation, a little bit about himself, his trading, his different trading styles, what he looks for, and then a quick market overview by Zach. And then depending on how much time we have, I'm definitely going to do a CGC case study. If we do have a little extra time, I may touch on the SPCE case study that Zach goes over and just looking at it from a volume profile standpoint. And then, of course, at the end, we'll do a Q&A session and any chart requests that you guys have. So without further ado, I'll hand it off to Zach, and I will stop sharing my screen.
All right. First, I just want to say thanks to everyone who took the time to sign up and watch the webinar tonight. I've been looking forward to doing something like this for a long period of time. So I've prepared a short presentation that should give you a little insight into the way I trade and the setups that I look for. So this presentation has 4 main sections. First, I'll introduce myself. We'll follow that up with a section about how I've evolved over the years as a trader. And then we'll take a look at the trading techniques and some major rules that I follow on a day-to-day basis. And then we'll take a quick look at a couple of case studies. I made a SPCE video. It will show how you could have traded it using TrendSpider's charting software. And then we'll look at a Tesla case study, a red to green trade that I executed on Friday. So let's move on.
Sorry about that. I just lost connection. Google kicked me off.
This section will be a quick overview of when I started trading, my trading style, and the timelines that I use. So I carry a full-time job. It's shift work. Basically, I work a 2-week rotating shift. When I work afternoon shift, I get home around 3 a.m., go to bed, wake up at 9. I trade the markets from open till close. I've been doing this for the last 10 years. And I'm back to work that same day at 5 p.m. It's been quite the grind. I've been invested in the markets for the last 12 years, and I've been trading the markets for the last 10. I focus on day trading and short-term swing trading. My average swing trade hold is 2 to 5 days. My Twitter handle there, I'm sure many of you already follow me. If you don't, check on my feed. I provide quite a bit of good information and actionable charts on a daily basis. And I'm a proud member of Trader Stewie's service, Art of Trading. I really have to give his service a shout out. I joined it about 2 years ago now, and my trading has grown exponentially ever since I've joined him. The education he provides is second to none, and I can't say enough about it. I have a website. It's called thetiredtrader.com. I share blog posts on there, trades that I've done and techniques I use and everything else that I do. in the markets, it's probably on there. Rules, capital management, everything. So check that out when you have time. And last, I need to thank my wife. We've made a lot of sacrifices over the last 10 years for me to be able to build my capital in my account. We skipped a lot of vacations we could have taken, So, thank you for her continued support and everything that she does for me to, someday maybe being able to realize my dream and being able to do this professionally. So for this section, I've created a basic timeline of how I've evolved as a trader. Um, it'll give you a quick recap year by year in the major themes that I've focused on in order to get to where I'm at today. So let's go over that now. So 2010 through 2012, I'll call this the all-in stage. It was reckless trading, little to no risk management. I traded through ERs, bought the hype. I didn't understand the markets, and this is right at the time that I started trading the markets. Luckily, I didn't blow up my account. A lot of the big losses that I did take were paper losses, and I sort of just became a stockholder for long periods of time and made the money back through just holding the stocks that I had. In 2013, since I was still in the market, I discovered technical analysis. I started digging into candlestick charting, technical patterns, and basic risk management. I deployed basic rule sets, and by that I mean it was all rules that I had just read through a book or seen online or heard about. It wasn't anything that I developed myself. And I think if you really wanted to get good at trading and develop something that works for you, your rule sets need to be your rules and your rules only, not something that somebody else has taught you. Then 2014, I've focused on timelines and technical analysis. I started getting a feel for multiple timelines and the importance of entry and exit strategies. This was the first year that I broke even, and it might have even been slightly profitable. 2015, started really spending a lot of time in front of the screens and just watching the markets and how they trade and how stocks trade. 5-minute time frames, 15-minute time frames, 30 minutes, and so forth, daily, weekly, monthly. And spending the amount of time that I did, I was spending 8-9 hours a day just watching charts. It really helped me with my day trading and being able to nail strong entries and strong exits. 2016, this is when I started developing my own style, since I had a feel for the market and how the market moved and how it traded. I was able to focus on the time frames that best fit my trading style. And everybody's going to be different. Some people love trading 5-minute time frames. Some people love trading 60-minute time frames. It totally depends on your your risk tolerances, your goals in the market, and what you want to be able to accomplish. So like I said earlier, I focus on day trading and swing trading. So I focus mainly on the 5-minute time frame for day trading, and my swing trades are anywhere from 5-minute for the entry, and then I'm looking for the technicals on the daily and sometimes up until the weekly. And this year was the big aha moment for me as a trader, because I really started coming into my own. So 2017 through 2020, I really started trading with consistency and confidence. I followed my rules all through 2017, and this was a really easy year in the market. I had solid capital management, entry and exit strategies. I was able to put on size and generate profits. And this year almost felt too easy to me, because it was the first year that I was actually making a substantial amount of money. And I wasn't so sure on how good I actually was as a trader, as opposed to how strong that market was. So at the end of that year, I wanted to seek some outside help and mentorship. So I up until that point, I was a self-taught trader. I never really learned anything from anybody else through 2010 into 2016. I was just alone in my home office, putting in time and learning how to trade the markets. So I felt that my trading had plateaued in 2017 in terms of where I was capable of evolving my skills. I joined Trader Stewie's service, and I never looked back. And honestly, I said it at the beginning, and I'll say it again: the education he provides is second to none. I wouldn't be talking to you today if it wasn't for him. Let's just put it that way. 2019, I made some upgrades to my office. I set up a proper trading workstation. I upgraded my software. I changed my broker. I wanted fast and consistent fills on my orders, and this was important primarily for my day trading. It's 2020 so far. I've been really sizing up on my trades. I've been generating bigger profits, and I feel comfortable and near emotionless with managing my trades at this point. I want to create consistency through strict P&L rules, and I know a lot of big traders and people that are experienced that are listening to this tonight will kind of cringe at creating consistency through P&L rules, but I really think that creating solid daily, weekly, and monthly P&L rules is part of capturing the highest percentage of the money you're generating out of the market. Like, making money for me in the market at this point isn't the hard part. Capturing the highest percentage of it is. So that's where my focus is for this year. Let's move on to part 3. So this is probably the most valuable section or the whole presentation. I'm going to highlight my major rules and the basic patterns I look for and follow on a day-to-day basis. And when I'm thinking about putting a trade on. So we'll take a look at my rules. I have a 1% rule. I never risk more than 1% of my total account value on a single trade. So say you have $100,000 of capital in your account. If I'm putting on a trade, I'm not going to risk any more than $1,000 if I get stopped out. For emotion, I always trade size that will not make me emotional. I trade size that I can manage, and I trade size that doesn't make me, basically shake at my desk. That's a very important thing. I have a max position rule. I only carry 4 positions maximum overnight. Throughout the day, I might have 5 or 6 on, but I always scale down into 4 overnight. And most of the time, I'm not even at 4. I might be 1 or 2 positions overnight. And, that is a very important part of keeping, consistent gains in your account. Because say you are in 4 positions overnight and you're 80% in and the market gap's down 1-2%, which isn't an uncommon occurrence these days. You can give back a lot of money in a single day just because you had too much size on. So that sort of goes back to the 1% rule and the emotion rule. I allocate 20% capital per trade, and that's usually the max. Sometimes I'll really size up on that, but it totally depends on the trade. And the names that I size up on are usually names like Amazon or Google, something that you don't really have to worry about overnight. So here are my favorite patterns and candlesticks that I trade. Bull flags. It's a high probability setup. It's easy to get out of. You can set tight stops on it. And if you're wrong and you get stopped out, there's always another chance to get back in. You can always buy it back. So there's clearly defined entry and exit points, and that's what I look for in all the setups that I go for. And falling wedge setup, I use this on stocks that are trending, have a strong trend or still holding the 50-day moving average. Look at a stock like Home Depot, the daily chart. That thing sets up falling wedges all the time that are actionable and easy to trade. And it's a high probability setup paired with like a hammer reversal candle. So I like looking for those setups and trading them. And also I trade symmetrical triangles. You'll see this setup a lot in the AMD daily chart. Again, you got a really tight coiling range with this sort of setup. You can set tight stops. You can put on size, and if you're wrong, you can always just try it again. It creates very good risk reward scenarios, and it's a high probability from my experience. And then hammer candles. I look for these primarily falling wedge setup. If I'm trading a falling wedge, I'm looking for a hammer candle like reversal. And then this is another easy setup to trade. You can set your stop just below the wick, and it's easy to see the confirmation. If it doesn't work out, it's a minimal loss, and usually it creates a very good risk reward. We'll move on to the case study now. This is the SPCE daily breakout, and it's a look from my perspective. I've actually made an interactive video here. So the video is about a minute long. It's just going to show you exactly how I would have traded it, mapping it out. It's just a look from my perspective. So I'll move on to that now. So this is the daily time frame from 2020, April 17th into February 14th. So you're stalking the chart. You're waiting for a setup to emerge. You start getting a resistance around the $20 mark. You identify the pattern. You set the pattern up. You measure the move. It's about a $4 move. And then you plan the trade. So your target should be about at 24 and your stop loss just below the low here at 18. And it created a series of higher lows. You want to create an alert so you don't miss the trade. So that's around 1990. And this alert fires with a plus or minus 10 cents. So 1980 or 2020. And this is a perfect way to not miss a good trade. And stock breaks out, you trade your plan, and you go from there. You see the volume picking up. This was an incredible trade last week, and I know a lot of people hit that trade. Move on to the live case studies. So I'll do a live case study on Tesla. It's a red to green day trading strategy that I use, and I've learned how to use this trading strategy through Stewie and his service. So we got the Tesla 5-minute chart here, and when I trade the 5-minute time frame, I'm looking for previous support and resistance levels from previous days, usually 1 or 2 days out. So Tesla gapped down on Friday into the 730 mark, and it was basically because of bad news about a potential recall, and they did a secondary offering at the 765 mark. What you'll notice with this trade, which stood out to me on Friday, is the volume pattern. So I'm looking for volume patterns when I'm day trading. The volume patterns on Friday were, approximately 2 times as much as they were the previous day on Thursday. And Thursday, it just sort of chopped around and didn't do much. So as soon as the stock opened, it gapped down into 740, sold off into 735, and then reversed hard into 757. And the reason why I started looking at a red to green trade on this particular setup was primarily because of the volume patterns. You got a lot of buy volume in the first 15 minutes, and it actually creates a little mini flag right here. So I'm looking for setups like this. It goes green around the 766 mark. So basically, you want to see how the stock acts when it goes green first. You're not gonna take the setup right away. So you make a little mark at where it goes green, 766. You could even create an alert there, and you just right click here, create an alert at this line, and then basically you just create the alert, and then if it fires, then it can catch your interest again. So it went green and actually pulled back again. What it did though was it created a hammer candle right here on the 5-minute chart, right at the support level of or the breakout level of that little mini flag that it produced. So this is the area right in here where you want to think about getting long, because the likelihood of it going green again after that reversal and the volume profile, it's pretty high. So basically, you're thinking about entering the trade. You try to get an order in right around this area, say 757 into 760. And then you want to set your stop just below this second candle here posted on the 5-minute chart. You can set your stop right right here. So you're going to risk $10. And go in half. I would go in half size to start, and then when it goes green, you fill your second half. So as the trade's progressing, you're looking. What I'm looking at is previous support and resistance levels from the previous day. So it tried near the end of the day to rally on Thursday, and it couldn't get above 774. So when the stock's trading up in this time frame, you're looking to see what it does around the 774 mark, and what it did again was created another flag. You can even add again to your position. So say you went in 1/3 to start, and then you added when it went green, and then you say you're fully in right here. At this point, your stop is going to be just below the 758 mark. And then the next important area you're looking at is right here, the previous day high, and that's very important. So the previous day high, it was around, say, looks about 790. And again, in that area, consolidated around that area and made another flag and broke out. And so, it broke out past the previous day high. You wait 15, 20 minutes. Now what you want to do is you want to make sure you do not go red on this day trade. Don't let it go red on you. So set your stop tight. You're already profitable in the 783 mark, and then let it run. And my target that day was around 810. So I took this trade from an average of 769 into 810. I had about 30 shares. And I took that off there. And that's how I mapped it out. And once I take a trade like this, and I do this every day, I post charts like this in the Art of Trading private feed. Any member that's watching this can attest to that. I make trades like this every single day. Sometimes they don't work, but when they do work, they work really well. You got to know, like, when you're day trading, like a fast name like Tesla, you've got to have strong targets in mind that you're going to stick to. It's not about emotion. It's about sticking to your plan. So, as soon as it hit 810, I just took it off and don't look at it again, because the mistake so many new traders make is they say, oh, I just made $1,500 on that trade. I nailed it. I'm a god. And then they'll enter again right here at the 800 mark because they think it has more upside, and then it doesn't. And then it pulls back, and then they add size when it pulls back. So they're even bigger than they were here. And then it just chops around all day, and you either get chopped up and you lose profits because you were, you thought you beat the market, and or you think you're better than the market, which, that's not what you should be trying to do. So if you nail a trade like this, a red to green trade, just take it off, take the chart off your watch list, and move on with your day. Because I'll tell you from experience, there's so many times where I've nailed trades and then give back profits because I'm too stubborn just to walk away from it. And I've really learned that over the last few years. We can move into doing an overview of the market now, if that's what people want.
We have a couple questions. Do you swing trade options, and what do you use to track momentum?
Okay, so I don't swing trade options, and for tracking momentum, I keep my charts very simple. Most of the time, I've just got the MACD and the RSI on the chart, and I'm looking for you know, I'm looking for just a basic trend line in the chart. And as soon as the trend line breaks, say this particular trade, then I'm out of the trade. Or say there's a divergence in the RSI on a shorter time frame, and it does what Tesla did down here, falls over right there. That's what I'm looking at when I'm in a momentum stock. I'm just looking for a break in the trend line. If the trend line breaks, like especially here, then I'm just out of it. It's not even a question. I just get out. I usually use the 20 moving average on the 5-minute time frame to watch, trend line support and how momentum develops during the day.
Let's see. What broker do you use?
I use Interactive Brokers. I switched to them in 2019, and I can't speak enough about how good they are. I used to use RBC Direct Investing. This was back 2016, 2017. Their fills suck. They don't fill short orders quick enough, and they don't allow you to link your account to any sort of software. So, Interactive Brokers has really worked out well for me, and it works out great for day trading. And I get great fills with them too.
Makes sense. Dan asks, what do you think of IB's charting versus TrendSpider's?
I don't even chart in Interactive Brokers at all. I haven't linked to a third-party software. I use like I say, I work shift work. So if I'm out and about and I can't be around my computers at home, I used TrendSpider when I'm out and about and I have an internet connection. It's absolutely perfect for that. And I would definitely say that TrendSpider smokes Interactive Brokers charting. Like it sucks, but I mean everything else about them's pretty good.
Cool. Well, if there's no other questions, we can probably just move on to some of the broad market SPY/Qs IWM update.
Okay. Yeah, we can do that. So why don't we do QQQ first? And we'll look at daily charts for that. All right. So I'm going to turn on the moving averages here. So I use 3 moving averages on the daily chart. Use the 200-day down here. I use 21-day, the blue line, and I use the 50-day. I looked at QQQ before the stream. It's starting to get really extended off the 21-day right now. The last time it was this extended was back in January 22nd. It was about 3.5% off the 21-day, and now, or 3% off the 21-day, and now it's sitting at 3.25% off the 21-day. I think there's, this market right now is it's not really the indices that I'm looking at. It's the market of stocks. It's not the stock market. Trader Stewie says that sometimes. So my setups and what I've been taking lately haven't been based off what the major indices look like and the big ETFs like QQQ and so forth. And the reason why is because a chart like this can kind of give you a bias that the market might sell off or it might not. But with all the news out of China and the coronavirus and everything, it hasn't really affected the market. But I read a headline today that they're curing people now and stuff. So Tuesday this market could just as well gap up, even though it looks way extended off the 21-day. So it's really tough to tell right now. What direction it's going to go in. It could chop for a little bit, create a bit of a flag, and then rocket higher. Like this market is strong. It's strongest it's been since probably 2017, and I hope people have been able to take advantage of this trend this year because it's been amazing. Go to IWM. IWM is always sort of like the canary in the coal mine. You can kind of get the feel of the market from IWM. IWM usually makes moves before all the other major indexes do. So if IWM sells off hard and all the indexes are kind of flat, you can bet the next day if the market's weak, the indexes will follow what the IWM did the previous day. So here's the daily chart here. It's sort of holding that the support around 167 area. But what's more interesting about IWM is actually the weekly. So if you take a look at the weekly chart and zoom out on it, you had this huge, choppy channel here last year and a little bit into this year until it broke out. That's sort of the area that the weekly chart for the IWM, if you like trading the small caps, is probably better suited for getting a feel of what you want to do. So where it sold off from its all-time high and its first kind of level of support way back here in January of 2018 at the 160 mark, we got out of this like bull flag here. It's basically a bull flag, and moved up, hit 170, and then it did a breakout retest. And breakout retests are perfect for getting yourself back into a trend that you may have missed. This breakout retest is important though, because it's right at that 160 mark where that support has been for so long. It's been over, it's almost maybe 2 years now at that 160 mark for support. So what you're looking for now on the weekly chart in particular is you got this flag, you got a flag here, kind of. A little bit, it's just a small flag. You want to see this breakout, and then you want to see how it does around the all-time highs at 170, 173. Now, the way I trade IWM usually is I use a 3-time ETF, TNA, because if you can get in on the right side of the way IWM moves, since it's so choppy, especially with like a ETF like TNA, you can make, good money in a short period of time. Like this breakout retest here was from 65 into 75. So almost a 15% move in 3 days, just trading a breakout retest. You're definitely not going to get that trading the index. So for major indexes, I look for three-time ETF. Let's go to SPY. I base my performance in my account off of the SPY. We'll go to the daily chart here. Again, big dip from coronavirus here, but that didn't last long. Obviously, it's what 5% from there in 10 trading days. Now, again, what I would look for is maybe a little pullback in the market because it's extended off the 21 day, and you want to see probably the 330 to 332 area to get back in, and then the way this market's trended, just go long, buy it and go long. That's primarily what I've been doing. Haven't been shorting this market at all. And that was a major mistake I made in 2019 at the start of the year. I gave back. I still outperformed the market in 2019, but I had such a strong bias of the sell-off in 2018 that I thought, the market can sell down further. So in 2019, my primary focus at the beginning of the year is just to short anything that rocketed, and I got burnt bad doing that. I still returned over 30% in 2019, but I figure I gave back about 10% worth of gains if I had just stuck with the trend. So, the trend always prevails. Watch the 21 day around the SPY and go from there. Another thing that I do, which I've made a blog post about on the tiredtrader.com, is I take a look at these major indexes and then go onto a site like finance.yahoo.com and scan the top 10 of each one of these indexes. If the index looks like it's going to set up, the top 10 in those lists for each index that these indexes hold are, they're there because they're the strongest. So, if you're looking for a trade that might give you a little bit of a bigger return, or a little, you just want to put on more risk, look at the stocks individually after you've scanned the ETFs. I always do that, and I usually look at the top 10, but I narrow it down to the top 3. So that was SPY, IWM, and QQQ. And then I always look at XOXL. This thing has made me a lot of money, and it it's an easy one to trade if you have good risk management skills. And with all this news out of China and everything, right now it's pretty choppy, but we're starting to the semis are really picking up this year. Like look at AMD and Nvidia, and Nvidia just posted great earnings as well. So what I would be looking at on SOXL, say we get a little bit of market weakness, because this thing will pull back quick, believe me. If we get a little bit of market weakness, I would try to get, for me personally, I would look for a trade, a swing trade, if SOXL can come back down into the 300 to 295 range, and then you can use, like, say, I don't know, this area of support 280 to 275 as a spot to trade against, which is right around the 50-day. It doesn't usually hit the 50-day though. It usually kind of trends around the 21-day. So I look at SOXL, and that can tell you a lot about the international markets as well, because, a lot of these semi companies, their production is coming straight out of China. And, this big sell off here in early February was all from that virus. And then it just rocketed right back up. And since semis are so strong, at this point, they're sort of just ignoring that news out of China. So if you think the market can continue higher, this is an easy one to go long as well. And there's always opportunity for great returns on this and on minimal risk. I have posted SOXL trades in the Art of Trading private feed like previous months and years that people have taken, and I know people have made money off of SOXL, some of the trades that I've posted. So I love trading this ETF. It's not for everybody, but I like it. Any more questions?
There was just a question about what Soxel was, but somebody answered it. I guess my question is, let's say, like, what does your typical Monday morning look like? Are you someone that's, waking up? I forgot what time zone you're in, but I'm in Denver time zone. So are you like, the first 30 seconds, are you ready to trade, or do you kind of let the dust settle, kind of figure out what the market's doing for the day, and kind of go from there?
Okay, so I'll never enter a swing trade in the first hour of the day, ever. But with my day trading, I'm looking for those red to green trades as soon as the market opens, and I already know the names that I'm looking at to do the red to green trades. And I talked a little bit earlier about how much time I spend tape reading. People think, oh, being a screen watcher is no good or whatever. All I do is watch screens. And the reason why is because, somebody that is much wiser and older than me told me a long time ago that you never understand a stock until you're in it. And the reason for that is because you don't know what you're going to do if you don't know what to expect out of that name. So, I look at, 30, 40 stocks on a regular basis, even on all different time frames, primarily 5-minute time frame, only because I pair my day trading with my swing trading, and I just see how that thing moves. What the average move is down, or how it moves up, or where it usually likes to break out, or just the flow of it. If you can spend your time and understand the flow of the market, even on a small time frame, it can really help you, and it can give you the experience to know what to expect. And if you know what to expect before you go into a trade, even if you got the best stop, the best plan, whatever, it takes a little bit of that emotion away. And I'm not an emotional trader at this point, but part of what has helped my emotion while I'm in trades is understanding what to expect in the stock. So, like I say, I just watch the flow of the market, how it trades, and I view everything on shorter time frames, and I roll through them. So 5, 15, 30, 60, and I'm always looking for those support and resistance levels, and I'm looking for areas where the volume should come in if my trade's going to be successful. If I see something roll over, especially if it's a day trade or whatever, then what I'm doing is planning an exit immediately off of those support and resistance levels. So I'm always studying the markets, and so in the morning, it's never a swing trade, only after the first hour, but my day trading, especially my red to greens, is probably, I'm looking for the first 30 to 90 minutes is where I want to be for that sort of scenario.
Cool. Well, I think as far as questions go, we don't have any right now. I'm gonna take over for a second, just do a couple of those case studies, and then we'll go into chart requests after that. So 1 second. Let me go ahead and do my screen share real quick. Can you see my screen?
Yep, I can see it.
Alrighty.
Do you want me to take mine off?
I don't think so. I think
Okay.
I'm assuming everyone can see my screen on the other end too. One thing that I do want to just mention, and this is kind of a pattern that I've seen occur a lot in the last like month. This is IWM, and this is like a very classic setup that's happening right now, where you've got this breakout, you've got previous resistance, you've got the breakout, you've got a retest of this previous resistance acting as support. And what's really interesting about this is you can see even from, you know, this October 3rd low, what I'd call like a capitulation point, you can see how much volume is kind of creating a base at this point. So, you know, can the price continue to fall? Yes. But what we've seen, especially like on work, a few other examples, is this classic breakout retest of this resistance level that usually acts as a pretty heavy demand zone, which you can see here. And then you've got a reversal. So if we look at work, this is looking like identical to what Target's looking right now. So that's something that I'm kind of looking at next week, you know, simply just based on my trading style. But what you can see here is you can see something very interesting. You can see the same exact thing. We've got this, oops, this always happens. You've got this breakout here. You've got this retest of resistance now acting as support. And you can see the same exact type of thing where we've got a lot of that volume holding as a base. And then you've got the next leg up. So if you kind of compare this chart with the breakout, the pullback, and the next move up, you know, IWM is something that I would kind of look at as possibly something to repeat that type of pattern. You know, as Zach mentioned, the whole coronavirus, you know, there's news that it stopped spreading as quickly in China. The market doesn't need much at this point to get a nice gap up. So if that did happen, it wouldn't shock me because we've got this perfect kind of breakout, pullback, and then possibly the next leg. Before I get into the CGC case study, you know, if you look at Target right now, literally you've got this same exact setup that you've got on work a couple weeks back. So if I anchor the volume by price from this reversal area, you can see resistance, resistance. You've got a breakout, a retest of this resistance now acting as support, and then you can see how much of that volume is currently holding here. And then you've got this volume gap essentially until about, you know, the 124s. So, you know, prices move based on supply and demand, volume. So if there's not a lot of people holding above until 124, there's not going to be a lot of supply to add on to the market here because there's nobody holding from this point until 124. So if you look at kind of Bitcoin, you've got a very similar kind of setup here where you had this kind of magnet up to this level above. If we anchor this from this capitulation point for shorts here, you can see that, you know, it shouldn't be a shock that we found, you know, resistance here because there were so many people holding here. It was hard for the price to continue to move up because people who finally got to break even are going to finally sell because they're like, oh, just get me out of this trade. So that's something that you can really use with the anchored volume profile because you can see here from this June 25th high, most of the volume is holding at this level. But if we go and anchor it from this point, you'll see that, you know, most of the volume now is holding from this level below. So what you'll really want to see is kind of a new volume base form here for price to kind of stair step from that point. So just wanted to make that point because I know we've been posting a lot of anchored volume by price recently. And, that's something that is really powerful and, a case study that we'll be going over now. So CGC is one that we've been kind of looking at the last couple of weeks as a case study on anchored volume by price. And so what you can see here is we had this massive move down. I mean, it was very obvious that somebody was just bringing the price down. I mean, to get a move from 26 down to, sub 19 in less than like 3 weeks is pretty impressive. So what we can see here is most of those people were actually holding at $24. There was barely any volume holding below here since this reversal that we saw here. Now, the reason why I kind of was very interested in this was because, because what I also did was I anchored the volume by price from this capitulation point here. And so as the price was dropping, we could see that the price was moving down into this demand zone because, this is pretty much a break-even spot for a lot of holders. So, as people start to kind of say, okay, well, I'm not selling at a loss, I'm just going to hold, supply dries up. And then you can see when we anchored this from the reversal on January 16th, this area that we just talked about then acted as a resistance kind of magnet area above. So what you'll see here is we've got this just ton of volume holding here since capitulation, but there was really, not a ton of volume holding here from this point, because what you need to do is you need to anchor it from the new status quo point, because here sentiment changed clearly. We reversed hard, and then from January 16th until February 10th, we went straight down. So you need to then anchor the volume profile from this point to see where that volume is holding since the status quo changed. So, this is something that I was able to trade over the last couple days. One of the things that I was very bullish on was obviously the fact there was so much volume up here. Second thing was, as the price was tanking, people were buying up calls. Put volume had no action. It was all call volume. And so that was telling into, into earnings that, somebody may be trying to load this up before really kind of getting a nice short squeeze here. And that's what you had. So that's just a cool case study that actually happened. I was able to take the trade on last week, and just wanted to share kind of a real life example that you can take advantage of using the platform. We do have a chart request session now. So Zach, if you want to take back over, if anybody has some charts they want to look at, Zach will take a look at some.
All right, I just got to get my screen up here. There we go. All right, I guess we'll start with Nike.
All right, and just a heads up, we may not be able to get to all of these because these are coming in quick, but we'll try to take a look at as many as we can with the time permitting.
Yeah, I'll focus on. I'm going to do Nike, Walmart, Baba, LK, Apple. We'll do all the big ones first.
Cool.
And also, I don't trade biopharmaceutical, so I don't have an opinion on those. The stocks are too crazy. You can get wiped right out on those things. All right. So Nike, it fell below the 50-day here, and did they have an earnings report back at this gap down? I feel like they might have. I'm not 100% sure, but regardless, I know they do a lot of their production in China, obviously, so that could be part of it as well. So last week it got above and held above the 21-day moving average. You had previous support here that sort of turned into resistance on February 4th, and then it came back down and tested the 50-day again. And now, like I say, it's back above the 21-day. You might want to see like a retest of the 21-day right around the say 101 to 100 area, and see if it can post like a mini hammer candle or whatever. And then what you want to look at is if it can do that and come back up, you might see a little bit of resistance around this high here, the 103, and then a push into what I assume are all-time highs. So if I was trading this, I would look for an entry around the 101 to say 100 mark. My risk would say be $2, and my first target would be 103-ish to 104, and then if it could break above that and hold, I would look to add. So I'd go in probably half size, add above 104, and then look to see how it does in all-time highs. Let's take a look at the weekly on this. Yeah, so on the weekly chart, you get a different perspective, a little bit of a flag that has sort of broken out here a little. There's the flag. And it's, as I said, they stop around $98. The weekly low here was right on 99. So if you got in around the 101 mark and put a stop right in the 98 mark, high probability that you'll probably end profitable on this one. So I'll go to Walmart. I think they have earnings next week, don't they? Monday. Can anybody confirm that? Pretty sure it's Monday or Tuesday, sorry.
Yep, Tuesday morning.
Yeah, Tuesday. So I do not trade earnings, and I'm not even I don't do that. That's what I did in the first couple of years I traded. I don't do that anymore. And like I say, I don't trade options, so I don't hold options through earnings or anything like that. I'm just strictly trading commons. So what you're going to look for, obviously, is after the ER, you want to see if it can push into all-time highs. If it can push into all-time highs, look for a powder earnings gap. Well, it's a technique that Trader Stewie uses. And what you want to see is like a strong volume candle that closes on highs. You don't want Walmart to gap up and then just sell right off. A perfect example of a stock that did that was Roku. So it gapped up right around into the 152 area pre-market Friday. And they had decent earnings, and all it did from the time it opened to the time that it closed was sell right off. It lost 22 points in a single day. I think it was one of the single biggest losing days it had this year, actually, and that was right after an earnings report. So that's part of the reason why I don't trade earnings, and I don't even really buy stocks on the day that they post earnings, no matter how strong they are. I wait for the setup to emerge. So if they gap up and post a strong candle, what you want to see is maybe, like a symmetrical triangle or something develop over the week or the next few days, and then use the low of, say, the gap up, if it does gap up, as your stop, and then use the breakout area as your entry, and then just manage your risk. That's what it's all about. I cannot stress that enough. You will not make money in this market if you don't manage your risk. If you're not managing your risk, you're just gambling. So let's go to LK now. Okay, so this one, I actually do like this stock. It makes huge moves, and if we do get strong, like positive news out of the whole Corona thing out of China coming into Tuesday, you could really see a strong move in the stock, because the reason why it sold off so heavily was because of that virus. Starbucks closed their stores in China, and LK being a coffee company, it's just going to follow the big leaders, and that's exactly what it did. And I mean, being a Chinese company, it's going to sell off violently, and it did from 52 into 26. So for this particular trade, if you are interested going long, here's sort of the trend line here. So what you want to see on Tuesday is you want to see the stock. So you had sort of like more or less a doji candle, and then like a little bit of a hammer candle here, but it didn't follow through. And then an inside day, and then another inside day. And inside day candles are great because it just means that the stock is consolidating, and it's actually consolidating on, you know, volume that was higher than average on even the days that it was breaking out back here in early December. So for this trade, your breakout is above the 21 day at, say, 39. Your stop is going to be below the low of this candle here. The low of that candle is 36. So the volatile nature of this stock, you're going to want to put your stop probably around, say, the 36 mark. And you probably want to try to get in before the 39 if you really think this thing can run, because, there's 10% risks there. So if it can break out, you could almost call this like you got higher lows here as well. So you can see the higher lows. We'll draw a couple of arrows. There's a higher low, and then you got your second higher low here. And so this would be the third higher low if it breaks out. And then you just want to gradually move your stop up if it breaks out. So if it breaks out, you're going to move your stop up to, say, this day's low here around this 37.50 mark. And then your first point of resistance is going to be probably a big round number of 40. And then you're going to look for it to move into, I would say, 43.80. And then I would say your max is 46.50. And this is really how I map out a lot of my trades on every time frame. I'm just looking for basic previous support and resistance levels. I'm not doing anything special here. I'm keeping it simple, and I'm just sticking to my rules and entering the best trades I can find with the tightest stop losses. And mind you, I'm not afraid to retry a trade again either. If I get stopped out 2 or 3 times on a trade for a small loss, I'm not afraid to go again, say a third time. But you can see all these support and resistance levels that it created before, and they're all in the 40, 43.80, and 46.50 mark. So good luck on that one if you're planning on going long. And I am actually long this stock half size. So that's my view on that. I'll do BABA now because I've seen that one a few times. I'm not actually looking at the chat. So actually, this is a chart that I posted. We can see the previous post I did on this, and it's actually great because it shows you how my rhyme and reason and my thinking goes. This is a chart that I posted a while back, probably November 22nd. You can see how it broke out of that flag there, one of my favorite patterns. Your stop was in the 180 mark. Stop was never hit. It broke out of the pattern. The first spot was the 186 mark, hit again at the with more of a push at 188, pushed through into 192, and hit my upper target of 200. So if you have good risk management, you can really stick with your trades. You can make nice trades, and it doesn't always work out for me. I'm not saying I nail every single one of my trades, because I certainly don't. A good month for me is about a 70% win. Those are some of my biggest months, but I'm still profitable, like highly profitable at the 50% mark. So we're looking at BABA now, and it's, if anything, it's creating a series of higher lows, just like LK did. Now, I mean, it's totally different sector, but you've got to admire the strength of Amazon lately. That made an incredible move, especially on the weekly time frame. So BABA, it should probably follow that sort of idea. So you got a sloppy cup and handle sort of setup here. You can measure the move, say at 209 into, say, 229. So that's a $20 move. You're going to look at a breakout above the 224 mark. So your breakout is right here. And you can create, like, what I use TrendSpider for primarily, especially since I work a full-time job, is I use it to create alerts. So if I'm interested in taking BABA long, I would just make a mark right at the breakout and set a wide range on that alert. So I just create the alert, move the sensitivity up to, say, plus or minus $1, just as it is now, and then create the alert. and then I would have it trigger and have it hit my cell phone and my email, and I would be able to enter the trade if it's something that I'm interested in. And I actually really like this chart. So 224 is your breakout. You can look for your first target at, say, 230. So your first target is going to be 230, and you're going to set your stop, uh, you know, basically probably just below this low candle here. Say it does continue up. This is theoretical, 217. And you're going in half size, since the risk reward for this first section isn't the best. And then after it proves its breakout, even if it does another retest, you could add to it and 3/4 size or full size trade, and see if the technical pattern plays out and hits that 245 mark. What other trades or what other charts are being requested?
I think someone asked to anchor the volume there, but I don't know if you've got the anchor volume profile up.
I
Um,
don't, I believe. I
I did
don't have it.
I did do a chart on this, and if you anchor it from that high where you started your resistance, there is a ton of volume holding at this current level, massive amount of volume. So
I do occasionally use the anchored volume, but when I'm looking, this is like a key point to my studies that I do on my charts. If I'm interested in a trade, I keep the information on the chart as basic as possible, because I don't want a bias going into any one of my trades. I just want to look at previous big, resistance levels and support levels, because that's where the stock was before. And it's not that I don't use indicators, because I do, but there's a right place and a right time for every single one of them. And I feel like adding indicators while you're thinking you like a stock or whatever can either give you mixed signals, or they can tell you, oh yeah, this is the greatest idea I've ever seen. And then you get really bullish on it and it doesn't work out. And then you put on too much size because you were so bullish. So I add the indicators after I've done the analysis. That's my thing. So if I go through 100 charts and I come up with 5 that are good, I might look at those aspects. And I have used like the anchored the VWAP before and everything else that we've talked about tonight, but I don't use it when I'm looking at stocks to trade, because it's just going to add noise to your process. And that's my opinion anyway.
let's see. No, all right.
Okay, BA and TDD. Oh, Tesla. Okay, we'll do BA and TDD. So BA. This stock is very difficult to trade, and it's because it is news driven. But one thing we'll look at, because I do follow this stock, I follow it a lot. I don't trade it very often. So this is the weekly chart. And the reason I bring the weekly chart up is because there's a very fine line here. You have major support in the 300 area, and you had major support at 320 at one point too, and that was one level that I was really looking at. But on the weekly chart, if you wanted to say, I don't know, invest in BA, and you had a spot that you absolutely had to get out, or you just, you just want a starter position, well then BA would be a good stock that where you could be like, okay, I'm going to start a small investment starter position, because maybe things turn around for them. Maybe, all the problems with the 737 Max and everything else gets solved, and everything is just fine and dandy, and this thing continues to rip like it did through 2016 into 2018. So on the weekly chart, your major resistance here, or support, sorry, is 300. And honestly, like, if it sold off for whatever reason, you would definitely see support at the 200 day, because I can't see big institutions hold this thing heavily. They always have and they always will. I can't see them giving up their position at the 200 day, and that's where a lot of them are looking at exiting positions, is the 200 day. So anyway, you have sort of a little bit of a wedging pattern here on the weekly time frame. You can use this area here. It breaks out sort of above the 350 mark. On the daily time frame, and this isn't a name I would trade only because of you never know if you're going to get stopped out on a huge gap down or whatever it might to be. But for now, it tried 350. You got the 200-day moving average here by the looks of things at the 350 mark actually. And then, sorry, that would have been the 200 weekly moving average on the weekly chart. I got my charts confused. So you got the 200-day actually at 350, and you see there's a little bit of resistance here. Every time it hit it in the last little while, November, it kind of hit it, sold off, hit it, sold off. So now what you're looking at, if you want to try to swing this thing, I wouldn't necessarily, but that's only my opinion. You got good sort of like potential support in this 330 area. It might pull down and kind of test the 50 and the 21-day, but what you want to look for is the 21-day crossing the 50. If this can create a higher low and the 21-day crosses the 50, that's sort of where a good spot would be to get long if you want to swing it into the resistance at the 200-day, or maybe even hold it a little longer and hopefully it hits the 370 mark. But I don't like using the word hope when I trade, so like I say, I just stick to the levels. Go TDD. I've traded this thing in the past quite a bit, actually. Made good money on it. The stock's awesome. Obviously, you can see it follows the 21-day quite religiously. Maybe a little bit of a double top here in this area. Move that up at the 315 mark or 313. So what you'll want to look for next to see if it can retest that 21-day. And it always kind of falls below it a little bit when it does test it. So your stop, if you're going to trade it, if you wanted to swing trade it, your stop would be near the 50. And you would look for an entry around the 21-day on, say, a hammer reversal, like a holy grail setup. That's where the stock tests the 21-day and then recaptures it with, say, a hammer candle or some sort of reversal candle, and then continues the trend up. So I would look for an entry, or say 290 to 285, stop just below the 50, which is about a $10 risk. And then at that point you have, if it can try the all-time high area again, you got about a $10 risk on a $30 reward, so a 3-to-1, and that's great risk reward. And I don't think I've mentioned it, but I'm looking for at least 2-to-1 risk reward on every trade that I do, whether it's a red to green day trade, a swing trade, whatever it is, minimum 2-to-1. So this is a great swing trading idea if it can get back into that 21-day area. Got Beyond Meat. Oh, Apple. Let's get Apple. So Apple, Warren Buffett's a happy guy. This thing does nothing but go up. So, a little bit of, you see the, sorry, just read that. RSI kind of falling here. You're starting to get, it's starting to try to hold the 21-day, and if with possible divergence here. But what you want to see maybe is a little bit of a pullback, and this has really been a market leader. And the reason why I say you want to see a little bit of pullback is everything's been so, I'm not bearish on the market, but everything's been so strong. If it's just hard to want to go all in on everything and not try to wait for a setup to come to you. And that's a very important thing. You should be waiting for a setup to come to you. You shouldn't be necessarily trading a setup based on the prior performance. But as you can see, it's held the 21-day. It always sort of dips below, but now it's starting. It's higher. It's higher on the 21-day, and it's RSI starting to dip. You probably want to see it dip kind of like it did February 3rd, the coronavirus, on some sort of weak news or whatever it might be, and see if you can get like an entry around, I would maybe the 314 area, and then your resistance or your support, sorry, is going to be 308 to say 305. And then with a stock like Apple, you just hold it if you're going to swing trade it, and let your stops do the work. Don't overthink it. If the trade comes to you, get in it, and then just hold the trade, and see where it can go. TNDM. I think I seen BYND. Let's look at BYND because it's done some pretty cool things lately, and it's actually starting to make like a bit of a flag here, which is a setup that I like to trade. Obviously, this stock here, it moves a lot intraday, so you've got to put proper size on. That's the first thing you should be worried about with stock like BYND is proper risk management size, because you'll get washed out of this thing if you're in too big. So it's held the 21 day. And it's created a couple of higher lows here, right there and there. And you can see support around the 105 area. So that could be your stop, or just below it. Where you want to see the breakout, where you would enter the stock though, really is probably the 120 mark. And then you would, that day that it breaks out, use just below the candle that it breaks out on as your stop. Don't give it much room to stop you out, because it's either going to work or it's not. But the consolidation here is nice, and the volume's starting to, I always look for this too, volume's starting to trend down a little bit, and the RSI is kind of in a good spot. The RSI has also created higher lows. So this thing could break out if, a little bit of patience. You got higher low here and here. A little bit of patience with it, proper risk management, proper size, and then you could see a trade into, say, you look for the 125 to 127 mark, and then if it's really going to run, it's going to push above 135, and then probably into 145. And I like to be conservative with my targets, and I always set like 1, 2, and 3 targets. And the reason why I do this is because I've talked about this year, I'm trying to capture the highest percentage of my P&L that I possibly can, and setting multiple targets allows you to scale in and out of trades and capture gains, and to capture that percentage of the P&L. So that's really what my main focus is this year. So if I was in it, my first target would be 127, then 135. I would like to take most of my size off at 135, and then maybe let the rest run to 144.90, and moving my stop up the rest of the way. So Tesla made a huge move on Friday. I talked about how I traded that, did a red to green trade on that. And I've done a few red to green trades. We'll delete this stuff here. This is way back when could have made 300% on it. We won't talk about that. I'll just get rid of these previous lines to get the noise off the chart. Okay, so you had that huge move up, and I was actually short 50 shares on this day here, because I figured that was probably the end of it. And I seen I visit this one subreddit called Wall Street Bets, and it's only because I like to laugh. Somebody on there had made $4 million on an options trade, and if people are posting $4 million gains on Wall Street Bet the day that Tesla almost hits 1,000, you can almost guarantee that it's probably going to come down the next day. So anyway, I didn't base my trade on that, but the RSI was super, super high, and it made a huge move that day. So I was scaling into a short position. I was actually 50 shares short with a cost average around 940, and I wanted to close below 900 to kind of like cushion this trade. So if it did gap up another $100 that next day, I would lose a little bit of money, but not all that much. So at the 5-minute chart on that day, it actually pushed into 970, and literally seconds before that $100 sell off in the last 10 minutes of the day, I took that 50 share short off. for a $1,500 loss, and that $100 sell off from 970 into 870, and then the close around 890 would have gave me the cushion I made. This is the biggest trade I've ever missed in my entire life right here. That would have been a $15,000 day. But anyway, on 50 shares short. But anyway, right now it is actually looking good to go long again, and you could, if proper, this is, proper risk management. You could use. Well, let's zoom in on the smaller time frame first. So the 4-hour time frame. So you could sort of use these last two candles here are kind of a good indication of where you could use a stop. If it gets above Friday's high, which was, I'll actually go to the 5-minute time frame. Sorry, that's 6. I'll get to 5. So I'm always looking at multiple time frames, like I said. The previous day high, or the previous high on it, looks like we're gonna have to zoom down a little bit more, or zoom up a bit more. The previous high on it was right in this area here. So you got a high here of 845, you got a high here of 820, and then Friday's high was 818. So the next breakout, if this thing's gonna break out and move, is gonna be above that 820 mark. And I would be looking to get long above that 820 mark, but with a proper stop on it. So don't give it, half size the trade and give it maybe a 3%, a 3% risk on it. And if it gets above that 820, it can easily push into this gap here of like 880, 890, maybe even 900. So that's where I'd be looking to get long. 820, and before that, I'm not really interested in, because you'll probably just get chopped up from my prior experience trading Tesla. And I'm just, I'm talking about my prior experiences when I say, oh, this might happen or that might happen. These are all things that have happened to me. And like I say, I watch charts every single day for hours on end. I see how they trade, and I see how Tesla can chop people up. So above 820, or say, 816, you get long, kind of front run it a little bit. And then your first target would probably be 840, and then 880 into 900 would be your final targets. Tesla does look good, so just keep your eye on that 815 to 820 mark. Microsoft has been super strong, actually. Does Microsoft have earnings coming up? Because I don't know.
I'm not sure on that one, actually.
Okay. So earnings, there's a account that I follow. So here's a previous chart that I posted on Microsoft right at basically the point that it broke out. This was in October, and I was talking about how this stock, it's created such a long base for a long period of time, from June until October. And that's another thing I look for. The bigger the base, the bigger the breakout. So the longer this it can consolidate, and it consolidated in such a tight range. Like you could have taken a really like a smaller size trade, maybe in like 1/5 on this, and had a stop at just below the 130 mark and tried that range, because it created that's a big bull flag there from December of 2018 into July of 2019. It flagged, it created a range for 6 months, and now look at this thing. It's amazing. It's extended off the 21-day, but it is creating a flag here. And if the stock, if the market's nice and juicy come Tuesday, good news from, say, China. It closed on highs on Friday, so that's another thing to look for. You could look for a breakout right in this 186 mark. You'd set your stop right here, say 181, and then here's your entry, 185.50, and then you would look for all-time highs for your first, and then maybe into 195 to 200. It's really strong, and the volume's been strong. It's solid stock. You look at like the fangs, like I mentioned this on my feed, Netflix, Twitter, or Netflix, Facebook, Amazon, all the big ones, Google. They've all been strong this year. It's almost as like the market's getting back into those FANG stocks and really trading them. And I feel like the way tech's been going at the start of the year, it's a good indication that it could really push this year if the market continues to be strong. And with it being an election year, even though I don't follow U.S. politics, I'm willing to bet Trump pushes this market as he usually does into the election because it's going to make a lot of people happy. What am I missing here? There's a lot of comments. Any big ones? Oh, Netflix. Well, we can cover Netflix. If I'm not reading the comments, so like if I miss your chart, I apologize. You can send me a private message after on my Twitter, and I can go through them later tonight. I have no problem doing that. I did that for a while, for like a couple months straight using TrendSpider charts, and I plan on continue to do that. But we'll get as many as we possibly can get done in this live stream. And it's kind of a good thing that people can actually look at the way I trade these names. So I've actually got Netflix already mapped out because this is a name that I look at, and I had been using the TrendSpider alerts for this. So it created a big cup formation here and a little kind of like a crappy handle. Cup and handle setups are actually, I like trading them because you've got defined risk, and that's all I really care about, like I've said. So a good spot to go long. I think I even posted this chart in my Twitter right around this area. A good spot to go long was 335. It pushed above that cup, created a flag, which I always look for. It tested the 21-day, pushed again. Perfect technical pattern here. So this flag here was 320 into say 355. So $35 move, and then moved from 345 into 375. So you got, it's perfect flag formation. Did another flag and, completed that one as well. At this point, just like the QQQ, a little extended off the 21-day, and I would be looking to get long again to see if the 370 area holds, and then you'd have a stop in the 360 area. And let's take a look at the weekly.
We do have one question about why do you use the 21 versus the 20?
Why? I've always used the 21-day moving average, and the 20 and the 21-day, there's really not much difference between the two. I use the 20-day moving average or the 20 moving average with my day trading 5-minute charts, but I've never made the switch on my daily charts. I've used it for so long. I've used it for 5 years now. I just don't see any point to change it. So that's why basically I don't think it will make much of a difference, and I'm happy with the way my charts look, so I just leave it. I keep it simple. Okay, so this is the Netflix weekly chart, and look at this thing. It's amazing. And it broke out on the weekly on last week, and it held above it. So you're starting to get resistance in the 380 mark, as you can see here. But if you want to trade the weekly chart, your next spot is 400. And I would pair, if I was trading, let's say I was trading this, okay, and I was going to trade Netflix, which I might actually because it looks as good. You try to get that area in that 370, 365 mark, and then set your stop 360-ish. That's a breakout retest of this weekly pattern. And then you just follow the support or the previous resistance and where it's made support, and see if it can break through this resistance here in the right where it closed basically on Friday around the 380, 385 mark. See if that can turn into support, and then look for all-time highs, 420, and then 440, 460, and so forth. And we'll just take a quick look at Amazon because I made a big trade on this as well, and I actually posted this trade live in the Art of Trading feed when I took it, and I posted my position size. I also posted it on my Twitter the day that I took it as well. So, and I was using the weekly time frame, in conjunction with the daily time frame. So you had really strong earnings. It gapped up. The power in gap sucked. Like it gapped up to 2060, sold off into almost 2000, but it never actually closed above 2000. The low there was 2002. And then the next day, it held the 2000 mark at 2025. And this is when I was looking at it. After that, it gapped up into the 2050 mark. And I figured we'd see some continuation in this name only because the way the weekly chart looked. So the weekly chart, back when I traded it, the resistance was the 230 into 250. So I was basically taking and I went full right at the beginning. I didn't half size it or anything like that. And like I say, I do that with bigger names. Full size position right at the beginning. I think I had 20 shares or something. So decent sized trade. I took full position. I set my stop at 1995, and I took it on this day around the 2049 mark. It actually closed on highs that day, and then it came back down, and then it held the opening support of the previous day, and then it ran. But on the Friday, I'm not quite sure when Friday was. What day was that? We'll look real quick. Okay, Friday the 7th. So this was the Friday candle right here. What it did on that Friday was very bullish because it closed above that resistance on the weekly chart. And this is when I knew this, I'd see some continuation in this because it did everything it needed to do. It closed above the weekly highs, or the daily highs. It closed above the weekly resistance, and it was also into all-time highs at that point. And then it pushed. So I took this trade from this candle here into this candle, and I sold it off at 21, I think 21.75. I posted it on my Twitter. It's there. But like I say, the FANGs have all been looking strong. Like look at Netflix, Amazon, Google,
Facebook.
Facebook. It's done some weird things lately, but all of this stocks that led the market in 2017, they're back in action this year, and that gives me, a little bit of confidence in my bullish bias. What else do we got going here? I don't know. Any other big names?
Gilead, GILD.
Yeah.
Or pharma, but
yeah, that's a pharma. I don't think they really Yeah, so you can see how choppy these names are. I mean, that's not that choppy, but it's pretty choppy. And, with as tight as I like to put my stop losses, I find it tough to trade these names because of how fast they chop around. I don't mind trading a choppy name that chops on an intraday basis, like say Roku or Tesla or those sorts of names, but names that chop on a daily and a weekly as much as this does, where it gives up, 5% in a day. It's hard to have proper risk management with it. It's created a base here. I mean, if you're long the stock, I guess you could use 60 as the support. But in a strong trending market, there's no point owning a stock that isn't trending with the market. That's in my opinion. Like, obviously this thing can do anything, and yeah, it could reverse and go to way back up to 110. But in strong trending markets, I'm focusing on the leaders. I'm not focusing on stocks that are just chopping around and might do something. I'm focusing on stocks that have a high probability of actually leading the market, breaking out. And you should be following the leader when you're trading. You shouldn't be trying to bully the market because you think you have an opinion that it might turn around. Anything else we got? Yep. So if I was taking that stock long, I'd be using 60 as my stop loss, and that would be it. And it'd be small size, and I would just let it run.
Let's do one more, and then I think we're getting a little out of time. But
yeah, that's fine.
Quite a few people on, but yeah, we'll do Uber. I think that's a pretty good one, and we'll do ZM.
Yeah, so Uber, they had a really good earnings last week or something like that. I don't know which day their earnings was, but you can, oh, it's starting to put this is the weekly chart. We want a daily here. So daily chart, you can see it's trending against the 21-day moving average. You're going to want to see if it can actually hold that before you get interested in it, or if I'd be interested in it. You want to see if it can kind of like hold that 38, 37.50. See if it bounces there. If it can create another higher low, like a little mini hammer candle, or kind of same idea as it's done before, where it's kind of like pulled back and created a flag. Here's a flag here, so forth. If it can create this here is kind of like a uh, mm, okay. Create, it's got a flag here. It's kind of like a falling wedge sort of setup here. See if it can do kind of like a falling wedge into the 21-day and kind of like hold that. The sell volume is a little bit high. It sold off on volume on Friday, so the close on Friday wasn't all that great. But see if it can hold that resistance area here, or the support area, 38 area, and then see if it bounces and continues higher. And then you got, it could almost create a cup and handle here now that I look at it a little closer. You got some previous support and resistance in this area here. Created it a while back in May and June of 2019. So it could do a little cup and handle and then continue higher. So you might push into the 45 area. There's other stocks out there that are a little bit stronger and, in my opinion, easier to trade than Uber, though. Okay, somebody's saying ZM, so we'll do ZM and then maybe we'll cut it off there. Yeah, so ZM. Actually made a chart about it here a while back in September. Short below 75, which was this area here. Your buy stop was 78. I don't know how that trade paid out, but it looks like it did pretty good. And continue down into 60. Now it's sort of rebounded a bit. It's created a there's 200-day moving average here on the daily. 21 crossed over the 200, which is bullish, and it created a flag. So here's the flag here. This stock is actually pretty hard to trade. I've traded it before with not much success, but it's all about your sizing on it, to be honest with you. So it actually held that breakout on Friday above that little flag here. Your stop at this point would be that either Friday's low if you actually bought that breakout, you maybe, or even the 86 area if you're smaller size. I'd probably use Friday's low if you're bigger size on that, because the breakout retest. And then with that move measures approximately 83 into say 90. A $10 move, so you could see it back into 100, and you'll see that a lot with stocks that break above $90 and hold it. They love that $100 mark. It happens a lot, and somebody actually did a study, like thousands of stock charts, about how stocks break above the 90 mark, and the way they do, and they hold it, they have a high likelihood of going to 100. So this would be something that you could watch and see if that area holds, and then maybe we can get a move into 100.
Cool. All righty. Well, one thing that I did want to mention for those that are still on, and for those that did fall off, you'll still be able to get the recording here. Let me go ahead and share my screen, and we'll share a coupon code that you guys can use if you would like to take advantage of the platform. You can get 25% off for up to 12 months right now using AW25. And this is something that is exclusively until midnight. We do have a sale coming up tomorrow for 20% off. So you would be getting more of a discount with this particular kind of flash sale that we have going on now. So If anyone has any questions, please feel free to continue to type them in the chat. But we will be signing off here, and really appreciate everyone coming to the webinar tonight. And once again, if you have any questions at all, you can follow Zach at AlwaysRed on Twitter, and you can reach out to us as well at hello@trendspider.com, and we'll answer any questions that you have. Zach, any last words for you?
Yeah, I just want to say thank you to everybody. This is the first time I've ever done a stream like this before. You know, I've worked really hard to get to this point, and I just want to say thanks to my wife first and foremost, because like I say, we've made a lot of sacrifices to get me where I need to be. And then Trader Stewie, and of course TrendSpider, Dan, and Jake. You know, this wouldn't have happened if any of those people weren't involved. And I'm very thankful for everybody that follows me and you know, asks for chart requests and stuff like that. I love it. You know, this is my passion. So thank you.
Hey, you're very welcome. You did a great job, and I think everyone was really engaged. This was easily our biggest webinar yet, so big congratulations to you for really getting a crowd here tonight. And thank you, everyone, for joining. It was really a great time, and we'll see you on social this week, and we'll have another webinar here on Sunday of next week as well, so don't miss that as well. And we will definitely be posting probably a few more charts into tomorrow, just with the market being closed tomorrow. But if you do have any other requests, I'm sure Zach will check those out. And then if you have any for us, we'll try to post them in the next day. Thanks, everyone. Have a great night, and we'll see you soon.
See you later.